All right, I want to take a peek at the markets if we can right now. This is just how we're faring today. But guys, are we able to show where we stand sort of year to date? They have all these fancy gizmos. They just press a button. They make it look like it's really impossible. But when you see it, it's remarkable because all the major averages are up appreciably. The Dow is a laggard at just under a 4% gain. Take a look at the S&P 500 for the first half, up almost 16%. I told you about the NASDAQ, up almost 32%. And sometimes I look at this and say, well, what does the Fed think of a market that's on fire? Does it worry about it's on fire too much or whatever? Austan Goolsbee is here to maybe separate what their thinking is. He is the Chicago Fed president, of course, a former top economic advisor to Barack Obama. He knows of what he speaks. Austan, good to have you.
Neil, I thought you were going to date it to January 9th when I took over at Chicago Fed. And I was going to say, oh, I don't know that it's me. What do you mean?
I could absolutely do that. I wouldn't be surprised. But I have great respect for you, Austin. But the one thing I don't understand, and I get different stories from different Fed folks over the years, and Democrat, Republican administration, Republican-appointed Fed heads, Democrat-appointed Fed heads, how closely they watch the markets. Now, to a man or woman, they say, oh, really not that much. We don't obsess over them. But something tells me you look at them, maybe not you in particular, but you look at them more than we know. What can you tell us or share with us?
Well, I can share, as you know, the law just gives the Fed two jobs: maximize employment, minimize, stabilize prices. And that dual mandate, for me, that's what we should be looking at. There's nothing in the mandate that says make sure the stock market stays high or goes up, make sure nobody loses money.
But so do you worry when it's tanking, Austin?
I mean, during the meltdown, I like watching all the data.
I hear you. But during the meltdown, the Bush administration was obviously watching it closely because that was the currency for a lot of the banks. They were losing that currency. That it just fed on itself. So obviously you can't not pay attention to it. But when it's going up a lot, and you have the Fed chairman and people like yourself saying we're going to be vigilant about inflation and these price pressures, I almost get the sense like you're trying to not rain on a Wall Street parade, but make them think, soberly about where this is going.
Look, I hope that the markets remain sober. We should all remain sober. I guess the example that I'd give is if you look at Silicon Valley Bank's failure, I couldn't understand why they wouldn't be hedging the interest rate given that they knew what situation they were in. And if you read the report, they were hedging the interest rate, and then they got rid of the hedges because they were looking at what the Fed said the interest rate was going to do and comparing it to what the market said. And they believed that they took a bet that the market thought that the Fed wouldn't keep the interest rate high. And so they got rid of the hedges. But that was a terrible idea. It's a terrible idea to bet against the Fed and just believe what's in the market. So like I say, I'm an old-fashioned data dog. I definitely watch the market and all other types of data. But I think we make a mistake as central bankers if we put too much weight on how the market reacts to our decisions. We got to be able to see through the waggles a bit. Yeah. And, if it's up, it's down. You don't take credit and don't take blame because that's not really the job of the Fed.
Well, I always take the credit and I shift on the blame, but that's just what I do.
I know you do, Neil.
Yeah. So let me ask you a little bit about that thinking, because I tend to look at economic data like you do, not nearly as closely as professionally. And the confluence is really good. I mean, very good. I know there are a lot of people who are going to hell in a handbasket. We're in a recession. It's just a matter of time. That might happen. I know HSBC sees it happening by the end of the year. I just don't see it myself, Austin. And I look at, inflation now falling to the lowest level since April 2021. That's a key index that you guys at the Fed follow. Consumer sentiment is now at its highest level since January. We've got oil heading down for the fourth straight quarter. I could go on about the technology sector, the strong retail sales, minus, now and then a Walgreens and some of these others that report difficulties. But by and large, packed planes, packed restaurants, packed theaters. So I look at that in the aggregate and think, oh, but you guys are going to be busy tightening more than just once or twice this year. What do you say?
There are definitely strong parts of the data, and the strongest is the labor market. We didn't talk as much about the labor market.
No, you're
the
right.
Unemployment
That's the biggest
rate's
example
really
of all.
low.
Yeah.
Yeah, and the worst part of the economy is the inflation part. And yes, it's coming down, but it's still well above where we want it to be, and it's proved stickier than we thought. There are critics who look and say about central banks, even in the U.S. and even everywhere else in the world, they've almost never been able to get inflation down significantly without causing a recession.
Right.
But that's exactly what we're trying to do right now. And I am hopeful that we can pull it off, because the pandemic was a weird business cycle. It wasn't, the normal rules don't have to apply. And if we do, that would be a triumph. That kind of landing, that we get inflation back to something like a target without having a recession, and we maintain full employment, that would be great. That's the North Star we want. And I'm heartened that there's still strength in various sectors, but we got to have balance. I mean, we can't, if the labor market is too hot, we will have a hard time getting the inflation down where we need it to be.
But you're still hoping to get it down to 2%, right? And you're not there.
We're not there. Look, it's still, there have been cooling,
Yeah.
and you emphasize that. And the thing that's interesting, I thought of in the price data that came out today and was reflected in CPI, is for all the talk about services, the thing that's been different and why inflation's been more persistent than we thought is that goods inflation hasn't come down as quickly as we wanted it to. So that's the thing that everybody should put their eye on in the immediate term is, are goods prices, inflation, is it too high for one-off reasons like used cars were especially high, but that's going to go away? Or
Right.
is there something more persistent? That's the key.
Do you ever worry that you risk overdoing it, though? What's the harm in just waiting out, as you did with the pause earlier this month, and seeing how things go? Or do you feel the pressure of it? Seems like every central bank the world over is hiking, I think with the exception of China, and that almost makes you fidgety, that they're all hiking.
Yeah, look,
what
makes
do
you fidgety. Look, Neil, you're on the central conundrum. Is it a puzzle? Is it what? That's the central case of judgment, is that you got to figure that out. When is the transition happening? And you know that there's a lag impact when you make these interest rate decisions. So over the last year, we literally raised the rates almost as fast as they've ever been raised, 500 basis points.
Incredible.
In 1 year. And you know that that's going to have an impact, but it's not going to be immediate. So that's what we're trying to figure out. Have we done enough already? Do we still have substantially more to do, modest amount more to do, and can we get inflation down without recession? So that's why I haven't made up my mind what I'm going to do. I don't speak for any of my buddies on the FOMC. I haven't made up my mind. We're going to get a lot of data over the several weeks before the next meeting. So I just think we gotta watch that and think it through.
Got it. Austan, I hope you have a great weekend. Austan Goolsbee, the Chicago Fed president, sort of Barack Obama, much, much more. Chicago.